Evening's webinar. If you're watching the recorded version of this, it was held live on Wednesday, April the 3rd at 7:30 in the evening. So this is the follower webinar that I do with Aondo. So we do a weekly webinar, which is 12:30 on a Wednesday lunchtime, looking at the markets, looking at the big levels, the trends, where the opportunities may be, all that sort of thing. So that's the more traditional market outlook webinar. But we also do this one twice a month, which is looking at the idea of social trading, copy trading, where you follow other traders and basically have them effectively trading automatically on your portfolio. So that's what we're going to do tonight. We're going to do it on a real account, so we'll do it with real money. We'll start pretty much from scratch, and by the end of the webinar, in about 30 minutes, it'll all be up and running. So you'll see how it all works. That's it. So we won't be sitting on doing lots of PowerPoint slides like this tonight. There's a little bit of PowerPoint just for the structure of the webinar, but most of tonight's webinar will be spent actually on the platform doing this and setting it all up. Okay, so I think that risk warning's been up there long enough. So let's go on to the next one. So the basic principles behind this idea of copy trading or follow trading. What we're looking to do is identify profitable traders. So find a group, a number of traders who look to have a good track record, and we think we could make money by following their trades. And once we've set this up, this all happens automatically. So it's very much a hands-off approach to trading, which I must admit, I've been doing it for a couple of years now. It does take a little bit of time to get used to when you see trades going through on your account without anything to do with you. So we'll look at that. Building a portfolio. So you can follow up to 5 traders on the Aondo platform. So we'll be doing that. Managing risk is really important, even though we've hopefully identified profitable traders. Clearly some of these traders do go off the boil now and again. The market changes and maybe they don't adapt their particular trading approach. So we need to manage the risk, and there are a couple of good risk management tools as part of this. So we'll talk about that and use those this evening. And then when it's going, monitor the positions. Keep an eye on how the trades are going. And there are 2 platforms on Aondo where we can do that. There's a simple top-down platform that we'll be using a lot of this evening. That's called WeTrade. And then there's the more sort of sophisticated trading platform called TradeHub that can give us a lot more detail. Right, so let's get started. So we're going to start off this evening by logging into WeTrade. Like I say, I'm using a real account with my real money. We'll have a look at the rankings list. The rankings list is like a league table of traders. We can sort we'll look at the different sort criteria. Sorting traders by P&L is usually the most obvious place to start. Then we'll drill down into data, looking at the volatility, percentage of winning trades, how they allocate their assets, and their open positions. Okay, so let's get on to it. So, I wonder if I can find, hold on a sec, I'll just find the right page. Okay, let's just go to there. Right, so when you first log in to the Aondo platform, you'll see something like this. So this is what's known as WeTrade, the WeTrade platform. It's browser based. So what we're going to do, so I'm logged in here as my account. So if I click on my account, I think there's about £950, £975 in there. There we go. At the moment, I've got no portfolios running, so there's nothing going on because I haven't clicked to execute it live. So we start off, the place to start is the rankings list. So let's click on there. So let me just explain this first of all, how Aondo end up with this rankings list. If you trade through Aondo as a sort of spread bet contracts for difference provider, you can, if you want to, choose to make your track record publicly viewable. Okay, so you can see, everyone sees how well or how badly you've done over the period you've been trading. And this is where we end up with our league table. So let's say, for example, let's just sort by P&L. You see we have the various traders down here, and at this count, looking at it here, let's go back since the beginning. We've got 517 traders who are making their track record available. So we can choose to follow some of these people. But let's sort by P&L. Here we go. So P&L, if I make it over the last year, it might make more sense. So P&L over the last year. So the best performer over the last 12 months of people who make their accounts publicly available is The Venture. And The Venture has made a smidge over 100% return. So it's doubled their account over the last month. You can see the P&L there of the chart of the account. So P&L there. We'll come to all these other things in a minute. The second best performer has been Giuseppe. He's it often crops up, this one, near the top of the league tables. So made just over 80% over the last 12 months. Then we go to Pipe Giga, 57%. Dow Jones 100, nice name, 57%. And so it goes down. Okay, so we can see the top 10. The 10th best performer made a 41% return over the last 12 months. Okay, so we can see our league table of traders. But for me, there's one drawback already with this view, because how Aondo works, and it's perfectly sensible to do things this way, but even if you have built up your track record on a demo account, you can still appear in this list. So some of these people aren't trading with real money, so they're trading with pretend money. And my view always is, well, if I'm going to follow you with my real money, at the very least, I want you trading with real money as well. So I've got no interest in looking at people who've built up their track record only using a demo account. So what we can do, so one of the filters we can do straight away, if you want to, when we're looking for top traders, is to get rid of anybody who's not trading with real money. And we can do this up here. So you can see, hopefully on your screens there, RMT, this RMT thing here. So if I click on RMT, it takes away all the traders who are trading on a demo account. So straight away, you know, we've culled a good 300 traders from this list. Okay, so we're now left with 180 traders. So again, let's just sort by P&L. So the top two, The Venture and Giuseppe, are still there. And everybody now, every trader now has an R next to the name. And the R means they're a real money trader. So if I just flip that off again, if we look at the top 10, so the top 10 we were looking at before, 1, 2, 3, 4. 4 were real money traders. So 6 of them, like for example, profit trading in here, no R next to the name means they're not trading with real money. So for me, real money trader, that's what I want to see. Okay, so now we have a different list. And you can see, I think, you know, just how hard trading is. I think plenty of people, if you've never traded before, I'm sure you get the same rubbish emails I do saying how easy it is to make 300% a week standing on your head. The reality, of course, it isn't. You know, let's look at the 10th best performing trader here, made just under 20% over the last 12 months. Now, a 20% return in the low interest rate environment that we're in is a good return. You know, so I think we have to need to come into this with sensible expectations about what real people trading with real money actually make. Okay, so at the top we've got The Venture, who did double the account over the last year. Then we got Giuseppe, but it does fall off pretty quickly to a more, I suggest maybe more sustainable level of profit. Okay, so we have some traders there we can follow. Let's just go through some of the data we have. So we have their name, the career. There are various different career levels that Aondo put in for traders to progress through, which can show that maybe they are more consistent than other traders who just started. A risk score there, clearly a lower risk score suggests a lower level of risk. A higher risk score like this, 10 is the max, suggests maybe a more aggressive approach to markets. P&L, how have they done over the period? Maximum drawdown, this is a really important one for me. I think this is a really important number to balance off against P&L. So drawdown is what percentage of your account got lost along the way before bouncing back. So let's say you went from your account went from 100 to 200 pounds in a year. Let's say, so you doubled your account, you made 100% return, but along the way your account dropped to 50. Okay, so you went from 100 down to 50, then on to 200. So your drawdown was 50%. Okay, you lost 50% of your account before bouncing back, and that's what this number's to do with. So ideally, if we want a relatively low level of volatility, we want, hopefully as low a number here as possible. Clearly, there are going to be drawdowns We all know, I think, if you've traded at all for any length of time, you know that to try and make more money, we need to risk losing money along the way, and trades aren't going to work out, but it's hopefully the overall trend is up. So the drawdown number is an important one. So the venture made 100% return, gave back 20% along the way. That's I think that's all right. When did their last trade? A day ago. Trades per month, relatively low level of trading this one. 5 trades a month. Number of followers, how popular are they? They've got 53 followers. Okay, and then compared to who's the most popular on this page? This one here. Positive, who has got 249 followers. So made 41% return, positive, maximum drawdown 13.7%. So that's a good ratio, I think, of drawdown to profitability. So let's find out a bit more. So we've got like a high level view here, and I think already we can identify some traders: the Venture, Giuseppe, even this guy here, Cabachus, positive. The top 5, they do look like, on the face of it at least, they got some sort of solid, sensible returns. But let's find out a bit more information. So let's click on the Venture. Okay, let's have a look in there. Here we go. So this is the page for the Venture. So we can see quite a lot more information here about how they actually achieved that profit or loss. So member since the 25th of Jan 2016. Risk score 3, followers 53, performance since start just under 79%. And there we've got the chart, we've got the P&L chart. It looks like the Venture didn't do very much at all, and it was only really here, so the summer of last year, where they started trading maybe a bit more actively, and you can see the account picked up. And this year has been pretty flat so far. That the money was made for his P&L, his or her P&L, in the last 3 or 4 months of last year. So the orange line, that's their P&L. The purple dotted line is the DAX, the German stock market index, as a benchmark to compare against. Okay, so we can see just how the P&L's done. If you look over the last year, the P&L looks like that. Over the last month, it's lost money over the last month. Over the last 3 months, it lost money almost flat there over the last 3 months, and you can see how the P&L stacks up. So even though this one's got a good headline figure, the last 3 months have been pretty uneventful. Okay, so maybe the market's changed, and this person's trading style doesn't really fit with the current market. But let's take a look. Let's take a look at some of the numbers. We'll scroll down. So number of trades, 158 trades. Winning trades, 43%. Again, to me, that's no big deal that they've got less than 50% of the trades work out. Because if you have a strategy, when it's right, it makes you 250 quid, and when it's wrong, it loses you £100. That's a good trading strategy. Okay, so the fact they've got more losers than winners doesn't really bother me. You will see some traders where their win rate is 99% or 98% or 95%, and that does bother me, because it does suggest maybe we've got a trader who has a problem taking losses. But there we go. Winning trades, 43%. Winning months, so about 2/3, 2 out of every 3 months end up with a profit. Last activity, I think that's wrong actually, 23rd of Feb. I think that's a bit out of date. Real money trader since February 2016. So some people in their background have a mix of maybe trading on a demo account for 6 months and then switching over to real money. This one has been real money since way back in February 2016. So we have 2 years of track record with real money. Maximum drawdown, 20%. I talked about that figure, how much profit is given back along the way. So let's take a look at the numbers. And this for me, performance is really critical down here. So this breaks it down month by month and annually as well, assuming we've got that long a track record. So 2016 was a bit of a non-year really in terms of performance. It was this month that did the damage. So in 2016, this trader lost 14% and ended up with a year-to-date performance, or a full year performance, of 13%. Now 2017, very different, turned it round. Ends up the year with 104% return, but you can see a lot of it was made here at the back end of 2017. A lot of the money was made. This year so far, slightly ahead, so 0.8% almost, but you see January, February, winning months. March was a loser. April has been pretty flat so far. Okay, so we can examine a lot more of their P&L. Okay, so let's scroll down. asset allocation, we can see what markets they trade. Now, a lot of traders on the Aondo platform tend to focus on the DAX. Aondo started in Germany. I think their headquarters are in Germany. So a lot of the traders come from that part of the world initially, so tend to focus on the DAX. So it's good actually to see this person here trades the German 30s. The German 30 is the German stock market index, the DAX, but also trades a mix of other stuff as well. So you can see how what markets this person trades. So, you know, some people you'll see will focus solely on one market. Some people will have a spread of markets they trade. I don't think there's any right or wrong here. You know, you could argue if you focus solely on one market, you get to really understand that market. On the other hand, if you have an approach that you think that works, let's say a trend following approach, there's no reason why you wouldn't try to implement that over a number of markets, because maybe the one market you're following has stopped trending, so hopefully you'll be in something else that's trending. Okay, so I don't think there's a right or wrong for this. Okay, so there's the venture. Let's take a look at one more, then we'll actually start building our portfolio. Let's go back to our rankings list. So let's have a look at, let's sort by P&L again. The second best performer, Giuseppe. So this one crops up quite a lot. Let's take a look at Giuseppe. So Giuseppe, 80% return over the last year. Maximum drawdown, quite a bit bigger than the venture. So giving up a third along the way. And there's the P&L chart. Let's click on Giuseppe and find out a bit more. Here we go. So I think everyone has struggled this year. You know, we've seen a change in markets this year. You know, if you follow stock markets, for example, you'll know that everything was chugging along nicely until the end of January, and then beginning of Feb, bang, it all falls off a cliff. You know, we've had massive volatility in stock markets. So I think for a lot of traders, me included, it's been a difficult one. You know, to shift, you have to adapt your approach from markets gradually grinding up to suddenly not being a lot more volatile. So there's Giuseppe's thing, P&L. So going back, we've got P&L going back to June 2016, so not quite 2 years. Really starts moving December 2016, and again it has maybe struggled a bit over the last month. Actually, we had a peak end of Feb, so the last 2 months or so has struggled a bit. So there's the overall P&L. What's interesting though, this thing down here, real money trader. So even though we've got nearly 2 years worth of data here, only started trading with real money in June, so about here. Okay, so this bit of the track record is built up just on a demo account. I mean, the account did move higher since then, but it's always important to check that. If you think you're looking at a real money trader, as designated by the R here, just make sure they are real money, or see how long they've been trading real money by looking at that there, June 2017, when they started trading with real money. Performance, I mean, last year was a cracking year. 2017, 145% return. Year before, pretty disappointing, down 22%. And so far this year, even though 3 months out of 4 so far have been losers, the account is still up 11% on the year. Okay, again, looks to trade at a mix of markets. Euro, 13% of trades were Euro. Brent, so crude oil was nearly 10%. Alibaba, 8.5%, and so it goes on. And if you want to, you can see things such as their open P&L, closed trades, all of that sort of stuff. Okay, so let's say the next stage now, let's say we've identified some traders we quite like the look of. The next obvious stage is to start following them. So what we're going to do, we're going to start following traders. And to do this, we'll access the portfolio builder. We'll set risk levels per trader, and then we execute on a live account. Okay, so let's just jump back. So let's say I want to follow Giuseppe. I think, well, actually, you know, overall, I like the P&L. Overall, it looks to have a sensible approach to risk management, because even though he's had 3 losing months out of 4, still up for the year. So it looks like maybe a classic trend following approach here. So I want to follow Giuseppe. Click on follow. It's as easy as that. There's a few warning screens that come up here depending on how they've done. So due to a negative performance, your selected trader was downgraded to street level. That refers to their, hang on, let me show this thing here. Okay, so they got because they took a bit of a hit, looking like here, big hit there. They've been knocked back in terms of progress. Before adding this, are you happy, you know, that this trader, to add this trader, even though he's been knocked back? And I'll say yes, I am. So now I have my portfolio of traders. So far, this Giuseppe, I think, runs 2 different approaches. So that's why the photos are the same, but the names are the same. So I've got, this is my portfolio I'm starting to build up now. So I've got 2 other traders, 3 other traders in already. Turtle Trader 1964, Smarty Trader, and Edelmetall. And what we have down here, the blue dashed line, is an idealized version. If I'd gone back a year ago and followed these traders, I'd have made about 183%. Unfortunately, of course, I can't go back a year ago and follow all the traders. So the usual disclaimer applies. The performance represented is historical. Past performance is not a reliable indicator of future performance. Okay, so that's it. So I've got my 4 traders in here. Let's go and add one more, just so we get to the full complement of 5 traders. And who I'm going to add, I think I'll add that the venture one. Where has he gone? Let's sort the list out. So I'll add the venture in as well. There we go. So I'll add that one into my portfolio. So I've got 5 traders here into the portfolio. So the next thing to do is, before we go crazy and say, right, just execute on a live account, the next thing we want to do is manage the risk. So what we can do, we can set risk per individual trader. So let's go into here. So what I can do, let me choose on Giuseppe, click on Giuseppe. So this takes a little bit of explaining, but let me just sort of start right from the basics. Let's pretend Giuseppe has got £100,000 account, and Giuseppe decides to do a trade on the Dow, and Giuseppe does a trade on the Dow, buys the Dow, and sets the stop loss 100 points away from the Dow, and then so 100 points away from where they get in, and decides to trade £10 a point, the equivalent of £10 a point. So with a 100-point stop loss at £10 a point, the risk to Giuseppe is £1,000. If the trade goes wrong, Giuseppe's going to lose £1,000, but Giuseppe has got £100,000 account. So that would be a 1% hit on their account if that trade went wrong. Now, if the trade was done at the same size on my account, I've only got £975 in my account. So really, I don't want the trade done at £10 a point, because it will wipe me out completely if the trade goes wrong. But it doesn't work that way, because what it does is when the trade gets copied on your account, when Giuseppe's done the trade, it's done at the same percentage risk. So if Giuseppe, in the example I just went through, is risking losing 1% of their account, the trade is done on my account at the same percentage risk. So if Giuseppe is risking losing 1% of 100,000, the trade will be done risking 1% of my £980, whatever it is. Okay, so it's scaled down massively. So I have the same trades running as Giuseppe, but just different size, because we're trading different size accounts. So I hope that makes sense. So what I can do, if I want to bump it up, if I'm really confident about Giuseppe, I can choose to have the trades done on my account at 3 times the size Giuseppe's trading. So rather than risking losing 1% in my example, if I bump it up to 3 like this, I'll risk losing 3%. Okay, I don't think I'd really recommend that approach. But if you're not sure, you can bump it right down. So you can bump it right down the other way to 0.25%. So if someone risks losing 2% on a trade, the trade will be done on my account, but at 1/4 of 2%. Okay, so that's what, 0.5%, isn't it? Okay, so you can bump the risk up and down. Personally, I tend to just keep it at 1, but there we go, confirm settings. There we go, and you can do this for all the traders. So you can go in and change it all, and if you want to, you can set individual amounts, so you can knock the risk up and down for various different markets. Again, for me, I tend not to mess around with it too much and just follow whatever it is the traders are doing. Okay, so that's setting individual level of risk per trader. The next thing we can do is set loss protection, and also I'll talk about this Aondo negative balance protection. If you've ever traded contracts for difference or spread betting, you'll know there is the classic risk warning. You should be aware you can lose more than your initial deposit. So you could put £5,000 in an account, but because you're trading using leverage, if you have a massive market move against you, the risk is you can lose more than your initial deposit. With Aondo's negative balance protection, you don't have that. So with Aondo, if you put £2,000 in your account, you can only ever lose £2,000. Okay, so you're not going to lose more than is in your account. So now we're ready to go nearly. So we'll click on execute on live account. Another warning screen comes up. Now, because of course these people are active traders, they'll have trades that are open. Edelmetall has got 235 trades. Okay. Giuseppe, who we recently followed, has got 16 open trades. The Venture has got 13 open trades. So what it says is saying here is, well, do you want to mimic their existing open trades? And I always say no. And the reason is, let's say Giuseppe bought the Dow yesterday when the Dow was 100 points lower than it's trading now. Clearly, I don't get put into that trade 100 points lower where it's trading now. I get put into that trade where it's trading now. So for me, I've got no interest in mirroring their historical trades, but I'm interested in following any new trades. Okay, so that's it. So I won't click any of this. Execute portfolio, and that's it. We're ready to go. There's a bit of contract detail stuff in there about contracts expiring. It's not particularly interesting. And we're going. So we go. So now we've got £975.10 on the account. My running P&L is 0 because, of course, no one's traded yet. Hopefully someone will do a trade in the next 5 or 10 minutes and we'll see it go through. But so far, 0. But if anybody does a trade now, it will go through my account. This is from the last seminar I did where I close all the trades ahead of the webinar. So there's a few in there. There's Giuseppe's trade, so I just sort of close them all manually. But the next bit of risk protection I can do, click on here, your loss protection. So even though I've got £975 in my account, I can put what is in effect almost a stop loss on my account. So I can say I've got £975 in there. If my account balance falls to, let's say, 450, close everything. So close all existing open positions and don't open any new positions. Okay, so click on save. So that's me having like a financial stop loss on my account. And that's it. You know, we really have gone through looking at building up a rankings list, looking at the rankings list, looking at who's doing well, who's doing badly, picking some traders, managing the risk, and then just monitoring them through the portfolio builder, looking at how well they did, and then we can keep an eye on them through my account. There's also another way of looking at this information. Let's just flip onto here. So we can monitor our open positions through WeTrade, which is what I do on this thing here, the browser-based, or we can log into TradeHub for a more detailed view. So let's do that. So if I go to the drop down up here, go to TradeHub. So this is for those of you who have traded before. This is the more familiar sort of trading platform, all singing, all dancing, charts, P&L, all of that sort of stuff. Okay, so we'll just wait for that to load up. Here we go. It's just coming now. Okay, and I'll flip it. So that when you open an account, you get an account you can trade through yourself. And I'm going to switch it down here to the social trader account. There we go. Okay, so there's my account. There's my. Hopefully you can see that on your screens. £975 10p. Open P&L 0, no one's traded yet, account value, margin available, blah, 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 blah. So in here we can do the usual stuff. You know, if you want to look at what's going on in the US tonight, let's have a quick look. We can look at things such as charts. We have seen a good bounce back so far, at least in the US, after a big slides yesterday. We've seen something of bounce in US markets. We can look at things like open positions. So at the moment, I don't have any open positions, but if one of the people I'm following does a trade in the next few minutes while the webinar's running, we'll see an open position go in there. We can look at things such as history, of course, so we can have a look. So I've not done anything on here for a while since the last webinar, but let's have a look. We can look at things like historical data of what's gone on. And I think the interesting thing here is you'll see how small the trade size is, you know, because we're scaling the risk right down. Look at the, so 22nd of March, a trade was done on the German 30, and it was done at, it was selling short minus 0.032. So the equivalent size, or the size in my account, was done at 3p a point, okay, because I'd scaled the risk right down. So it's very easy to set up, various levels of risk that you're comfortable with. You don't need to lose your shirt when you're following other traders, because I think it can be a little bit odd in the beginning, when you're seeing these trades going through in your account, and they're nothing to do with you. So you can dial that risk right down just to get a feel for it. So in TradeHub, you can do stuff, adjust positions. So if someone buys the Dow, puts a stop loss 100 points away, you can go in and change that stop loss if you want to. I wouldn't recommend it, because again, if you change that stop loss, it's your trade now. So when they close it out, it won't be automatically closed out. And the whole idea with this follow copy trading is that the trades get opened and closed without your intervention. What you're doing is picking the traders to follow and managing the risk. You can view things like account history, you can run statements, you can add funds in, you can withdraw funds, all the usual stuff. So that's done through TradeHub. We've done that already. You can log in directly from the web platform. You have the usual key figures on your account at a glance. So the P&L, the open P&L, the value of the account. You can change positions if you want to. You can look at financing costs. So again, if you're, because you're trading on leverage, because you're putting down a sum of money that's controlling a bigger financial position, you have to pay interest costs. You've got to pay overnight financing, so you can do all of that. You can run your account statements, and that's it. So you can do it. To me, I must admit, I do tend to just look at, going back to here, that view, the high level view, because I'm not too bothered about what stop losses they're putting on and stuff like that. I don't need to monitor it that closely. I mean, clearly, for my own trading, I take a bit more interest. But if I'm following, a suite of traders, what I want to do, what I'm more concerned about, is their month-on-month performance. So I tend to look at that. But if you want a more detailed view, you can go into TradeHub and see things in a lot more detail. So no one's placed the trade so far tonight. I'll leave that running, because again, if someone trades a bit later on or someone trades tomorrow morning, the trade will automatically go through. But it really is as straightforward as that. If you've never done it before, I'd say give it a try. When you first open an account with Aondo, you can set up a demo account, so you can play around with it for 3 weeks and do sort of demo following to see how it goes, and see how you do and how volatility affects the people you're following, all that sort of stuff. But then if you decide to follow for real, it's, as we saw with some of those risk control steps that we took, you can really dial in a low level of risk. So if like me 2 years ago, you'd never done this before and it was all a bit daunting, you can set the risk to a level of risk that you're happy with. And of course, if you change your mind, when we're following people now, and I think, actually, I need to rethink my whole following strategy, if I click stop execution, so the big red button there, it will stop doing any new trades, and it will close any existing positions. Okay, so it's very easy to manage the risk that way. But we are just over half an hour in, so I'll wrap things up there. If you have any questions, feel free to drop me an email. My email address is david@tradeafter.com. You will get an email link to the recording of this webinar probably in the next 24 hours. So if there's any bits you weren't sure of, you can watch them again. And I did blog about running a follow account with real money from about a year ago. If you go to jonesthemarkets.com, the information is there. But we'll wrap things up there. Thanks for coming along this evening. Let's just see if anyone's traded yet. No. Thanks for coming along. I'll let you get on with the rest of your evening, and good luck in your trading. Okay, thanks very much.